This is Trader Travis, and in today's video, what I want to do is show you how to combine one of the oldest and most widely used market timing indicators, the 200-day moving average, and you pair it up with the leverage and profit potential of option trading to make big profits like this, a 53% return on my money in about 6 months time frame. Now, for those who don't know who I am and who are new to my world, why should you listen to me, right? So what? Who cares? Who's this random dude on the internet talking about investing? Because after all, I don't look like most in the investing community. My family is just a few generations from slavery, right? So what do I know about money? Thankfully, my ancestors fought against racism and prejudice and gave me opportunities that allowed me to achieve financial freedom when I was 34. I then went on to win the US Investing Championship to become one of the top investors in the US, and also wrote a best selling book outlining how I achieved financial freedom in only 5 years, as well as shared one of the most simple investing templates I have learned and discovered. And I learned it from one of the world's best investors, Warren Buffett. So I don't have any Wall Street credentials. I didn't go to any Ivy League schools, but if those credentials are enough for you, then I hope you enjoy today's content. So if you read my book, I talk about the 200-day moving average. It's this little red squiggly line here. It's just basically taking the average prices over 200 days and then drawing a line like we used to do in school, right? You graph stuff out and you draw a line and connect the dots, right? So it's just showing you the price movement over a 200-day time frame. Now, in my book, I talk about this is now the market timing, indicator I use. So basically, how I use it. Let me switch out to a 5 year time frame right here. 5 year daily. So these are the daily prices of the stock market, the S&P 500 over a 5 year time period. And the way I use this market timing indicator is if prices are trading above the 200-day moving average, I am bullish. Bullish means I expect prices to go up in price. Bearish means I expect prices to fall in price. So as long as prices are above this, I am more bullish in nature. If you're new to option trading, guess what? You can make money when the market goes up, down, or even sideways. And so I use options to make money when the stock market falls here. It falls below the 200-day moving average, and I become more bearish. I use strategies that allow me to make money when the stock market falls. Now, with that short lesson out the way, let's look at the timing of this indicator. And I taught this in the book as well as a case study showing how this works. But I just want to do a quick lesson here on the moving average as well as something they call support and resistance. So we can see here at the top of the previous bull market back in the end of 2021, prices fell down. They touched this 200-day moving average and it acted as kind of a support. Support is like a floor or a price area where prices come down to and have trouble going through. And you'll often see this. And before I give you a quick lesson on support and resistance, I want to say some experts poo-poo on indicators, right? They're like, oh, it doesn't work, it's voodoo and things like that. And I've been using these for several decades now, and I've come to the conclusion that they can keep their opinion and I will keep all the money I've made using what they say doesn't work. Right? The way I want you to think about technical indicators is like it's like they're like weather satellites, right? It's like saying, weather satellites don't work, right? Weather satellites don't guarantee it's going to be a certain temperature every day or whether it's going to rain or not, but they do show you what's most likely to happen. That's the way I want you to think about technical indicators. Don't use them as guarantees. That's what gets people in trouble. Treat them as like weather satellites, what's likely to happen. Now, with that mindset out the way, let's use that mindset and apply it to the stock market. So we look here, prices fall down and touch the weather satellite, right? Come to support, they test this line, they go through it, but then they come back up. They peek their head up above it, but did this price area hold? No, prices eventually fell down. So what this tells you is that when prices fall through the 200-day moving average, again, weather satellite, they're telling you that most likely they will continue downward. Not a guarantee, but it's saying most likely, and you can profit based on that. So that in fact did happen. Prices fell down. We went through a bear market, and then prices bottomed out here and they started going back up. They tested this now. We moved to something called resistance. Resistance is like a ceiling, right? A price area that prices go up to and have trouble going through. But once it breaks through, that previous area becomes support. You see that on the chart here, right? Prices broke through resistance, the 200-day moving average, right? Came up, fell back down, tested. It's now support. It's no longer resistance because it's above it. So it tested it and it launched off. Classic stock market movement. I've seen this over and over again over the 20 plus years I've been investing. Again, it's not a guarantee that every time you see this is going to rocket and go higher. Sometimes it rockets and then falls back down, right? But it's like the weather satellite. All we can do is say, okay, most likely, once we see prices go up through this 200-day moving average, and I taught this in the book as a market timing indicator, I'm like, okay, it's time for me to buy call options. Call options are a leverage form of investing where I can make 20, 30, 40, 50% return on my money based on stock price movement. And that's what you see right here. So I can buy these call options when I get a signal that the stock market will rise in value. And if it does, in fact, keep rising, you see the percent return I can make. Now, you don't have to believe what I say. You can believe what your eyes see. What do you see? Well, my broker platform, which is Thinkorswim or TD Ameritrade, which is now Swap, they're telling me that I have a 53% return on my investment. I invested $4,500. So far, my profit is $2,400. And I've been in this trade a little less than 6 months, probably about 5 months and a half, give or take. And I opened it at the beginning of the year. This is something I call my Buffett call option. I outline that in the book. It's a strategy I modeled after Warren Buffett and the strategy he uses to trade options. A lot of people don't know. He doesn't trade options, but a lot of people don't know he uses options in his overall investing plan for Berkshire Hathaway sporadically, right? But still, he's made billions with options. You can research that yourself or just watch the rest of the videos on my channel where I outline the strategy I modeled after him. So I hope you found some value in that. And then it's one of those things, once you see it, you can't unsee it. So from now on, start paying attention to support and resistance in the 200-day moving average, right? You'll see prices fall through the 200-day moving average. They fall through support. And when that happens, it breaks support. It will often test that price area again, which then becomes resistance, right? It tested that area of resistance. It broke through it temporarily, but eventually fell, right? That price area held and prices fell back down. Well, guess what? When prices are going up, you'll see the same thing. Prices go up, fall back, test that previous price area, and then rocket higher. So once you see it, you can't unsee it, but pay attention to it and look for it from now on because you can use it to potentially make big profits. So you take care, and if you like this video, make sure you like and subscribe.